I want to start off saying thank you for having me. One of the things that I find in preparing taxes is that realtors come in and they have no idea what they're doing. They come in with the document and say, here it is. So the first document in these folders that I provided is the 1099 NEC. The 1099 NEC, these are usually issued by your broker. And when you get these, you're considered an independent contractor. And as such, a sole proprietor. So the good news is that with this 1099, you get to take expenses against this income. Any questions? I see that look.
What can we expense?
I found 31 items realtors can expense. It'll be in the back of that folder. But
Awesome.
this 1099 is your key. You're an independent contractor, you're a sole proprietor. Now,
Just remember, at the end of the year, not all real estate companies send it right away. So before you jump and go and do your taxes immediately, just know you probably will have some trickle 1099s come in. So maybe you wanna wait a little bit, because every commission that you earn, that company's probably gonna send you a 1099. Go ahead, Vic.
so we're gonna look at the small business entities. Today's topic will be the three entities are the sole proprietor, the partnership, and the S corp. As I said, with that 1099, you're initially a sole proprietor, no matter what you do. When you come in as a sole proprietor, they're gonna take that 1099, and you're gonna have to fill out a Schedule C. And on that Schedule C, they allow you to deduct for commissions, advertising, mileage, and on and on. A partnership is usually under the LLC. It's a state entity, so you've registered with the state to become an LLC, a limited liability corporation. The S corp the S corp, you're also registered, but you have a whole different set of responsibilities. So, show of hands, how many C corps do we have here? S corps? I know 1, 2, 3, 4. Okay. LLCs? And so the rest would be sole proprietors. Under the sole proprietor, anyone can, as long as you're a real estate agent, you're a sole proprietor. 1099, you're it. Qualified joint ventures. If two spouses, you know, husband, wife, whatever, if they're doing the same business, they can qualify as a joint venture. What it keeps them from doing is filling out a whole bunch of other paperwork. They still have to do the Schedule C, but they have no other paperwork to fill out. Here's the taxation. And there's the Schedule C with the 1040, your ordinary income from W-2s and 1099s and any other documents you have. Self-employment tax. So, as a sole proprietor, LLC, S corp, C corp, we all pay a self-employment tax. What that self-employment tax is your Social Security and your Medicare. So, adjustments to income is 1/2 of the self-employment tax. So the government, the IRS, deems that since you're the employer and the employee, you shouldn't have to pay the whole thing. So they adjust half of that self-employment tax on your income. If you have separate health insurance or separate retirement contributions, you can also adjust your income down to that. So one quick word, when folks come in, sometimes we get to talking and say things that are native to our language, to the tax preparer's language. So there's a tax credit and tax deductions. The deductions actually come off of your income. The credits come off of your tax. So these are all deductions against your income. Good.
Can we ask questions while
Sure.
Okay.
I would love to. I'm used to the question.
Okay. QBI, what is QBI?
Okay, I'm glad you said that. It will come up later, but QBI is Qualified Business Income Deduction. Excuse me, I had a bout with COVID and everything. So it's a Qualified Business Income Deduction. During the Tax Cut and Jobs Act, I think it was 2017, the president decided to give corporations a tax break. So corporate tax rates went down to 21%. Well, then there was uproar, of course, in the small businesses work that. So what they came up with was, of your income, your gross income after all the deductions and everything, you'll get a 20% decrease on that income.
Okay.
Now, the trick is, and we'll talk about this, but when you have an S Corp or a C Corp, they have math because you have W-2 employees, you have 1099 employees, you have, you may have inventory, you may have, so they have adjustments to kind of figure out what your actual income is. So limited liability corporation, it registers with the state. It can be taxed as a sole proprietor, a partnership, or a corporation. So we kind of talked about this offline, me and Tip. Even if you're designated as a corporation, a limited liability, a S Corp, a C Corp, or whatever, you can choose to be taxed a different way. And that's when you ran into.
When you say be taxed a different way, what do you mean?
So you can be taxed as, so as an S Corp, you can choose to be taxed as an LLC.
Okay.
You know, as an LLC, if it was just me and my wife in this business, we could be a qualified joint venture.
Okay.
But because we went LLC, we get taxed as a partnership
Okay.
So what would be the benefit
of,
of being taxed differently?
so with a sole proprietor, you only have to do the Schedule C.
Oh.
So you still get deductions for business travel, business mileage, all the perks, right? But that's the only one you have. You don't have to come up with a whole bunch of crazy receipts and
Right.
keep track of records of everything.
Okay.
But you do have to keep track of your mileage. We'll get to that. But the biggest perk I see with the LLC is a small paperwork. Sole proprietor is even smaller, Schedule C. In LLC, you gotta do a 1065 to get a K1, which is the equivalent of the 1099
For the business?
for the business. Well, K1 is actually for the individuals involved. So, partnership. Partnerships are two or more parties that share the profits and loss of a business. Now, a corporation is a legal entity and is formed under state law. It's treated as a separate entity from its owner. So the corporation itself gets taxed. Then its distributions to its owners, whenever it pays, it gets taxed again. It's fun the way they tax us, right? taxation on a partnership, and this is what I had said earlier. So 1065 is just a tax document. There should be a copy of it in your folder here, that you can look at.
It's the first one in the back.
So that 1065 becomes a K1. And all you're doing is reporting all the income and all the losses. And then whatever's left is the profits that's shared by the
So that
partners.
would be the partners. Okay.
Right, and that becomes the partner's income. And that K1 indicates their income. Guaranteed payments, one turns into ordinary income, and you have a self-employment tax on it. And of course, all the adjustments when after self-employment, health insurance,
Bless you.
Thank you.
Bless you.
and retirement. This is the one nobody here has. Taxation on the C Corp, it's a flat 21%. Once they tax corporation sends out dividends to its participants, its own, investors, owners, and distributions are taxable dividends. The other thing is wages, reasonable salary. The IRS put a big thing out this last summer. They're looking at the corporations and the S corps to see if the owners are actually paying themselves a reasonable wage. Some owners were paying themselves, $10,000-$15,000, and then taking the rest as a distribution, to get around paying taxes on income.
Yeah.
What's considered reasonable?
Well, the way they figured that out,
My time
Because-
is worth a lot.
exactly,
We don't want people to know that.
exactly. So actually, they take businesses, similar businesses, and take the income from those businesses and come up with an average. I don't know if any of you watch football or follow football, but I do incessantly. But Baltimore Ravens are getting ready to trade Lamar Jackson. Well, to keep him, they put him on a franchise tag, right? Well, with that franchise tag, he has a payment due, but it's an average of the top 5 quarterbacks. So it's less than what he was looking for. He was looking for 250,000, and I think it turned out to be 120,000. Million. Sorry.
We took a pay cut.
Like, what's that per week?
Per game.
So S corp, same thing, reasonable salary, adjustment to income, health insurance at 2%. Ordinary income from Schedule K1, and the only difference is you fill out 1120 instead of 1065. It's not a real big difference. If you look at them, you'll see that it's just the same information, how much income how many profits you made, how much losses you have, and what's the end income. These are the eligibilities for an S Corp, domestic corporation. Shareholders must be citizens, resident aliens, and certain types of states of trust. No more than 100 shareholders and only one class of stock. So, we have any questions?
Can you change your, or how, you can, how difficult is it for you to change your formation? So if you wanted to go from the S Corp to maybe an LLC?
Just register. It's,
Okay.
it's just as simple as sending to the state the registration forms. I want to be an LLC. I elect, it's a 2553 is the rule. I'll check on that.
And also
I'll definitely
based
check
on
on that.
money, how much money you pay the state.
Yeah. That's it.
Yeah.
So,
And then when you file your taxes, the taxes are per page. Explain about taxes being per page.
so it's not so much per page, but it's per form.
Per form, yeah.
So if you have an LLC, you're roughly gonna pay between $350 to $750 to have your taxes done. Depending on what you have as deductions, how much work they have to do. One of the things I see all the time that really hurts is that some of these deductions that we get, you know, the MLS dues, the association dues, the training, the education, the mileage, folks come in and say, hey, I don't know, probably about 150, I don't know. Yeah,
They won't do that after they've been audited, I'll tell you, I was audited one time.
exactly. And that's
$150?
$50.
That's all they're.
That's what they think that the taxes are going to
They're
be.
not paying attention.
Oh, no.
You know, when you get forms from the association, from your MLS, you know, and you keep track of those, and what is it, 150 a quarter? But they're not,
Approximately.
but they're never, they don't keep track.
Wow.
Record keeping is key. And it's sad.
Yeah.
Did you have a question?
Who, me? Oh.
No.
No, I was trying to.
So every year, it's probably key, how he got into doing taxes was because the assumption that we had an accountant, and he said, this is too much, they're charging you too much. I don't do taxes, I don't like taxes, I get real stressed out every time it's here. Taxes are horrible, but I'm good at organizing, so I'll organize, and I organize everything in categories. So when he's like, I'm gonna take a class, just so he had the education. And come to find out, he realized, one, how complicated our taxes are, and two, how expensive it is. And it was running us anywhere from, it started $300, and with the last one we finished, we were up to $1,000. And it's because of the complexity. We had taxes from different states, from just our own business to we started getting different complexities in the association, our commissions, personal taxes. So at the end of the year, you kind of want to keep a category, or maybe it's probably easier to keep monthly. Do it monthly. Do monthly calculations of all your deductions at the end of the year. You sit at the table and then just do that. But if you are clamping everything, all your receipts monthly, when you take it to the tax professional, it's gonna be so much easier.
He's
All
gonna
the-
smile at you.
Yes.
He's gonna say, hey, you know, when we get you a cup of coffee, you want a donut? Cause I got this now. I don't have to ask you any questions. It's all laid out.
And then you guys charge by the companies too, right? Because so if you have more than one business.
True.
Yeah.
True.
Yeah, cause I'm doing my research now and it costs me almost $3,000 to get my tax done. Cause I have a non-for-profit as well, and they're charging me, they charge me a different price for the non-for-profit, and then I became a real estate agent.
Yeah.
So I'm just like, we're gonna pay this, it's not.
There's no coupon anymore, there's no, I'm gonna try and use somebody cheaper. They're all about the same. When I first started, my taxes to file were $25. And they went up every year. And so that's why nope, I'm gonna keep doing our own taxes, because our taxes are the most complicated that has advanced him into the realm of tax professional.
Companies and
Yeah.
corporations has made me study up on what happens. One of the next topics to follow up with that is the first year of business, which I think everybody here has been around for a while. But one of the, I'll come up in a minute, but one of the topics is record keeping. And just like she said, if you come in and you have everything in order, that tax preparer will love you. He'll have you out, and it'll save you time. I had a real estate agent come in, and, you know, I would ask him for, you know, his MLS dues. He goes, oh, I don't know. I gotta run home and get it. Well, now, he's left the office, somebody fills the slot, he's gotta wait till the next slot comes up, then he comes back, but then he forgets something else. One of the things that the IRS, or one of the things I like to speak on is mileage.
It's the hardest one.
Yeah, well, actually,
Well, that's what I
actually,
use,
it's
mileage.
it's today's topic,
This one?
yes,
Okay.
first year business, and up to, record keeping. So, we had the same problem first couple of years with keeping track of the mileage, and we tried apps and,
I use, in, QuickBooks, Intuit as a mileage. I found, yeah, I use it, I keep it on, it tracks my miles every year. But you have to physically go in it and tell it what it is, business or pleasure. Oh God, months and months go by and then I forget about it and don't have time. Keep a calendar so I have to go back and figure it out. So that's good, it gives you reporting, that's how I keep track of our invoices, commissions, things like that. We also do Excel spreadsheets, I keep track of everything. But the one so far is if you get one of those apps that do mileage tracking, somehow, if you're not interested in going back and telling it what it is, perhaps find something that is automatic. Maybe turn it on only when you're doing business. That way, even if you don't go back and automatically calculate it, it'll tell you you've got 12,000 miles that could come up with some deduction. And you'll know, okay, those 12,000 are all business. So that's one of the better ways, perhaps make sure one gives you a report so that you can at the end of the year just print that report. Yes.
Now, if you forget to do all that, right, can you just say, it takes me 15 miles to get to the office and 15 miles to get back home. I go in the office 4 days, times that by 4, here go my mileage, and then all the events that I do, add it up?
Yes.
Okay.
and you can do that.
Paper.
That is
Right.
perfectly
Okay.
fine.
You have to
The
remember.
problem comes in when the IRS audits you.
You need a list of it.
You need a list of where you've been.
I had to create a
what-
calendar.
Okay, that's
and I got it.
fine, because you know, the office is different things like that, but,
Or on your calendar, on your phone, every day.
Okay, yeah.
I know you guys are in the digital age, but this thing has saved my life.
and I still remember this.
And that's
I
a
love it.
Realtor calendar that has the mileage deductions. If you do your phone calendar, maybe at the end of the day, say, you know what, I went here, there, and everywhere, I was 50 to 100 miles today. But somehow you have to continually track it.
Right.
Now, if you use these for appointments,
Mm-hmm.
it'll track automatically. You know, hey, on Saturday, I'm going to
Right.
show A, B, C house, and then you look down and it says,
Right.
call, things to do,
And
expenses. And you look down, and you know, you don't always zero out the trip calendar, but
Mm-hmm.
you'll get an idea of the mileage and you put it in.
Right.
These are what they call contemporaneous notes, so you're writing it while it happens. And when the IRS comes, if they come, this is proof.
Okay.
zero out.
Wow.
Well, you know, if
odometer.
you are, I'm a small real estate company, and if you take escrow, you can be sure you're
Oh,
gonna get audited
Oh, yeah.
by the IDFPR and the IRS. It happened once. It'll hopefully never happen again.
Usually when you open your small business, they come in and greet you one time, you know, the first time. It happened to us right away, as soon as we established our small business. It made me sick to my stomach. I couldn't
It was the
believe.
worst summer
It's
of my
the
life.
worst. It happened on my birthday and I had the flu. And I was like, are you kidding me? Actually, it was, 4 years ago, last Saturday.
So it was sickening, but those audits are actually good.
Yeah.
They help you to understand what you are not doing, what you didn't know to do.
Right.
But no, it's, they're gonna come knocking again at some point. I'm sorry.
Oh, wait, no,
The IRS is actually doing audits, cause we know another, company, property management company, and they're an S corp, C corp. C corp, and he's got a wonderful audit going on
Yes.
right now. It's been going on for about a couple months.
Exactly.
So they
Not
are
no 2-day thing.
in full force right now.
I have a question. Actually, I'm not very familiar with this, but I had a realtor, one of my clients, ask this question just a few days ago. I provide her checks and funds for her marketing. Okay, so we always ask for a W-9. So we help with her marketing. Does it matter if she's a S corp or how she goes to file with that funds that I'm giving her to build her business? That makes sense?
So,
Over
Okay.
600.
yeah, 600 is the
Yeah.
bottom limit. Anything less than 600, no one has to report,
Regardless.
regardless of
if
what it's
she's-
for.
okay.
Yeah. We'll get to it.
Is that 600 per, or is it
Total.
total?
Total.
600
So
total.
if you gave her $600 total for the year, or $599 total for the year, you wouldn't have to report it.
Okay,
Then it's just a
And then
regular
it's-
business deduction.
okay, so if it exceeds over the 600, 599, should do a business deduction for that? Or,
You got a 1099.
Yeah.
yeah, okay,
But if they're a C corp,
and that's what she is?
C corps,
Yeah,
you
It's
don't,
different?
yeah,
You
you don't
don't-
1099.
they have to
C corp.
report it themselves, you take it as a deduction.
The C corps have a higher responsibility to report
Right.
their income and profits and losses. We usually take, as a company, you would pay somebody on 1099, you would also send a copy to the state and to the federal government. So the IRS already knows, hey, I paid Christina, $1,100 for this commission.
Okay,
But C corps, they have a higher,
and that was what she had asked, because she is
Yeah.
a C corp, if it
Right.
was different then,
right.
okay.
Show it shit to you, but you.
I just got the check. I don't know if it's deep. But, it's nice to know, so that way I can let her know too.
Right.
Check with her accountant. Thank you.
These are gold. Quick story. It's paper, I know, it's not the digital age or anything, it's paper. But I set it in the car, and I'm driving, and when I stop, oh damn, I went 120 miles a day.
Or log in your phone, there's a calendar on your phone every day, just
Mm.
do a login. Once you get in the car, zero your odometer, when you're done, you did all business all day. Do it, log in your phone, and then that way you know.
What if you got multiple businesses that do multiple things, and
Keep it
some of them may be all real estate, like, what's your
So
suggestion?
for the mileage, so I would take the mileage, okay, so this year, you're gonna have post-net, you're gonna have real estate, it's all gonna be business deductions.
And we flip houses too.
Okay, but you did the flipping last year too, right? Okay, so take your mileage that you had, that's your base. Take your mileage that you had that you reported to the IRS last year, so that's your base. Figure out if you're doing about the same amount of business this year in real estate, flipping, whatever. If you don't keep the mileage separate, if you forget, okay, I went to PostNet, I went to, use last year's as a basis, take this year's total, minus out an estimate of what you feel if it was the same as last year, and then that's your PostNet for.
Okay.
that's probably the easiest, but just keep all your receipts, the key is your receipts. You gotta keep
Paper.
yeah.
I'm telling you, when you
You
come to
gotta
the end
keep
of the
the
day, you go,
receipts
oh yeah,
I
this
use
is what I did.
QuickBooks and it automatically for both, cause I have an account for both businesses, right? So I actually see when I go to QuickBooks, they have the wireframe and then I have like the hookah and then the, the
Oh,
event
okay.
planning. So when I see it, I can,
So do you name them,
yeah.
so do you have 3 separate accounts? See, that's the key.
But they all go to QuickBooks. So when I go to QuickBooks,
You can get
I
one
can actually
reporting.
hit, okay, Wells Fargo is this business.
Okay.
So then I have to go through and make sure, that I separate it, but
But she
that's
has
my
to
business.
manually do something.
Yeah.
She has to manually set it apart or account for it or what have you.
But it's just real easy when I go on there because I only use my business cards for business,
Correct.
so.
And it comes out, you just work what's best for you, what's easier for you. This is easier for me. I can physically go, I got it in my hand, IRS come,
He used to make fun of me really bad because
that's the little story.
I can't go anywhere without it, and I'm old, I can't remember, and so if I write it down, I'm a checkmark person, so I'm obsessed with checkmark. So I have to constantly checkmark where things are, when I'm done, where I'm going, but my biggest problem is mileage.
Yeah.
I have the biggest, hardest time with the mileage. Even though I have QuickBooks, I still have to go in and find the time to sit there and tell it what it is.
Yeah.
So what we do to get over that is he uses last year's for a basis, plus he sees other realtors. Now if you made, let's just say if you made $10,000 in real estate and you had $120,000 in miles, there's something wrong. There's something wrong.
There is.
So, and that's a big red flag for the IRS to come after you and say, hey, we just wanted to have a little chat. So what he does is, the last 2 years, COVID and all that, our mileage, our incomes, everything doubled. So he started with a base, then with the 2 years of COVID, then we started a new base. And so now this year, or last year, I probably didn't do as much, so then we make sure that we make that deduction. So your income definitely has to follow what your mileage capabilities
Well, I don't know, there were a lot of, the beginning of last year, showing a lot of homes. and
Well,
making
yes,
offers on them,
yes.
And you didn't
Right,
get
right,
any.
correct.
Yeah,
that
so
is true.
I
Right.
drove so many
Yeah,
miles and
well,
not
that's
getting
where
the
the 2
money.
year reflect, right?
No payment, yeah.
The
And
2 year worth of crazy
That's,
COVID,
that's the deductions that a lot of realtors miss.
right?
Yeah.
You're just driving, not just driving
Yeah.
around, but just showing off.
Yeah.
What it feel like,
Yeah.
what it feel like.
I do like the mile IQ because it gives you a map of what the destinations were, so like if you don't remember, you can pull up the address right in
And
that
see where you were.
and see where you
Yeah.
were, so you know if it was personal or business.
And that's what QuickBooks does too. You just turn it on and off when you want it to track you automatically.
What is the cost of QuickBooks?
When you
on that?
start up, there's like an introductory, I think I'm at $15 a month.
Yeah.
But when I started, it was $5. It was
Yeah.
some sort of introductory and now it's $15.
Because
Is it worth it? Yeah, it's
Yeah.
worth it for me. I use the invoices, that's how I do, my broker statements, that's how I pay my agents. I love it, I use it every single day. It also does reporting. If you use it to the fullest, it'll help you give reports for your income. It tracks your income, it gives you all your deductions. It also allows you to, it gives you a rough estimate of what your quarterly taxes are.
Is that the app itself
It
on your
is.
phone? Because I had the program,
No, the app
and when
is-
I updated it's no longer compatible, so now I'm back to,
It's worth it
what
to
is
get
it,
the app.
Excel.
Yeah, it's worth it to get the
That's
app
what I
because
use.
it updates, it gives you all the updates and it's kind of live. I was gonna do the program, but I was like, I was afraid of exactly what you did.
Yeah, it eliminated it completely.
Correct.
And even though I paid for it, they're like, yeah, it's not compatible anymore, buy a new computer.
And you can actually,
Yeah.
And that becomes a deduction.
Yeah,
And
yeah,
you
but my
can
computer's
link
fine.
the QuickBooks, you can link it to your bank account so that I have it linked to our business account so that all the deductions all the income, it's all there, so it actually does the reporting for me. I just, at the end of the day, or at the end of the month or whatever, you just have to go through, it's all gonna be business because it's linked to your business account. Just go in and tell it, you can give, what do they call it? Rules, thank you. You can make rules and it'll say, oh, she went from, she bought, everything at Main Street. That's a rule, automatically, that was her duties. So it'll do a lot of it for you, and when I go in now, I think it's very minimal, that I have to just assign it and tell it what it is. But that is a really great tool, and it'll give you, you can create lots of reports with that.
Is there a cap on mileage? How many miles you can
Well,
claim?
one of the things that the IRS looks at is reasonable. There's really no cap per se. You know, but like she said, you made $100 and you went 1,000,000 miles, well, that ain't gonna cut it. We wanna look at you. The other thing is, the mileage is at 63 cents a mile. So each 1,000 miles is $620 off of that income. So it's really worth, the mileage is really worth keeping track of.
Now, does the mileage include like your insurance and the wear and tear on the vehicle, et cetera, or is insurance separate, like is
It's
car insurance is separate?
Separate, E&O insurance, car insurance, things like that are separate.
Okay.
I think someone had a question on depreciation versus mileage. Well, anyway, you can take either the standard mileage rate or depreciation. We always suggest taking the standard mileage. Depreciation will give you a bigger deduction, but for a shorter period of time. It'll only go to the value of that item. So if you got a $20,000 car, you take $10,000 depreciation this year, you got $10,000 next year, and then you're done with it. Standard mileage for the life of the vehicle.
Plus maintenance. Maintenance is a separate deduction as well.
So what about for electric vehicles?
And that's starting to come up. I just had one with a guy that's getting a tax credit for purchase of electric vehicles. So I would have to get back to you on that one because we're really looking into that, and I went, what?
Because last year it didn't apply. Last year it wasn't.
Well, it's all what the elected officials are allowing that year. When, I don't remember was it Obama? No, it was
Trump.
No, it wasn't Trump.
Bush?
Yeah, they were pushing the electric vehicles, and that was like #1 on their agenda. So if that becomes a high priority on their agenda, that'll determine how many credits you're gonna get.
Well, it is a credit.
But
There's a credit for it.
And it's
I'm just
coming
not
more.
well
Yeah,
versed in it.
California is making it all of
100%
yeah,
mandatory.
They're pushing
And
for it.
if you guys been to the auto show, half the auto show was electric.
Yeah.
I mean, I went there the other day and I'm like, oh, what is all
And now you can
It's all electric now.
drive longer on one charge, cause when they first came out, we were looking into it, and the charge was 200, I don't know, about 240 miles. And that wasn't enough. I'm like, oh, no, that was not enough chance for me to go out, because there's sometimes I'm at 300, 400 miles. I mean, I could be in a whole nother state half the time sometimes of the business that I was doing. And, you know, if you get run out of electricity and you're stranded, you have to tow your car somewhere. So that's an added expense, and that wasn't something that I was interested in doing, but now I'm seeing that the mileage is over, 340 miles to the charge.
Yeah.
And if they're gonna be extended.
And I think you can put charging stations in your home.
Yeah, you can.
Yeah.
And it's not really expensive.
Right.
Me and my
That's what
husband
I
was
heard.
looking at it. I think they was telling us for the outside was between $700 and $1,200. Cause I'm looking at a car it's cute, it's pink. So I was like, oh, like that. And it's electric, and her name is Ari. No lie, Nissan. It's Ari.
As
And
long
it's
as
pink.
it's Nissan, it's
And
good.
that's actually, that can actually be a business tool too, because you can get provided where you live, you have enough space to do it, you can't do it in a subdivision, because your association won't let you probably, but you can buy charging stations and be on the map to make an income to have other vehicles charge. So, but you have to have that capability. I don't know how much the charging station will be, and I don't know how much income you'll make, but that could be some sort
That would
of
be hard because they
opportunity.
sell lots in Chicago.
And-
They sell in different lots.
In the local ordinance. where
Correct,
you're
so
at,
you have
they
to find
allow-
out. But I had a client, he was looking for property, and he bought, some property with some space, and that's exactly what he wanted to do. He wanted to put charging stations outside his garage and in the location, and to make some additional income.
Yep, I mean, they sell lots now, so.
They are.
Yeah, the 16 Ward, Alderman, they had a whole program talking about how you can buy lots in the Inglewood, Hyde Park.
And just be a charging station.
Well, not even, just buy them,
Yeah.
but like you said, you can make it into a charging station, and it wasn't a lot, it's like less than $1,000 for the lot, cause they just trying to have people do something with the lots, cause they all just so vacant.
And held them accountable
Yep.
for, yep.
It's, you keeping it clean and all that type of stuff.
And then they'll raise the taxes.
So
Right.
the biggest thing is keep good records of
Yeah.
everything you do.
Yeah.
Go on to the next one. So the accounting methods. 95% of you will be cash. Your income is reported when you receive it, not when it's earned. So, you know, we have one instance where, an agent,
At
Ms.
the end of the
Danielle,
year, yeah.
she had a
At
closing.
the end of the year, we run into problems, is this year or the next year? Where they close a deal in 2022, but by the time we get the money, the checks have cleared, it's 2023. It always happens in, you know, like when you, Happy New Year to you, you had a closing, you know, the 31st or something like that.
Yeah,
So that's the only challenge, and I think, what did you say, if it's earned?
for cash, if it's received this year, then it's income this year. If it's accrual, if it's under the accrual system, if it's earned this year, then it's taxed this year. So companies say, hey, you know what, I'm gonna buy 100 widgets and you're gonna, you know, I put the order in. Well, now you made those widgets, so you've earned that salary. He may not pay you till January on an invoice. Well, for the bigger corporations, under the accrual method, they can count that as income for that year. But we, for the most part, are cash. When we get it, is when it's taxable. If you get it in January 2023, it's taxable for the year 2023.
Checks received in December of 2022 that were cashed in January of 2023. Say it's, I mean, is it a pigs get fed, hogs get slaughtered type scenario? Where a check was received on December 15th, but wasn't deposited till January 5th? What's the interest?
But when you receive it, and you're under the accrual system,
It's
you've
2022.
received
Cool,
it.
yes, but
Yeah.
if you're under the cash system,
2022, we
You
take it
earned it.
as
You got it.
2022.
yeah,
Even if you didn't cash it till next year.
it's still gonna be on the,
Correct.
The date of
Yeah, sometimes though, we
The
have
date of
closings in
issuance, right?
December and
Yeah.
they mail
Yeah.
the check and you don't get it
that's what
in
I'm saying,
January.
yes, and that's what
Until
I'm-
I get it, I don't report it.
Yeah, that's what I'm saying, and that's what I'm thinking,
Yeah.
pigs get fed, hog. If you're keeping your books from October
Yeah.
through December, and you're saying, oh, I didn't get it until June, well, that's gonna be different.
Yeah.
Alright.
Even though you deposit it later, that's okay, but everything was transacted and closed, I accounted for the previous year.
So we have 3 business documents, business income reporting documents. Everybody knows the 1099 NEC. The 1099K has been around for a little while. what it is a third-party approval type system. So people who pay using Vimo or Cash App or one of those, they're using a third party. So if I use Vimo to pay you, Vimo will send a 1099-K. And it's gotta be over $600 again, but. And they're still working out the kinks on it. It's, cause sometimes, you send money to someone just for dinner. Yeah, any reason.
And y'all send me something the other day.
It's just like weed, you gotta tax it, they're gonna find a way, everybody's using it, so they're gonna find a way to tax it. So just know that's coming up, the channel.
Oh, it's here.
Or it's here. It's ridiculous.
The 1099 miscellaneous, it was used in place of 1099 NEC for a while. Its original intent was for royalties, rents, payment for book publishing rights and things like that. So it's starting to sunset. The 1099 NEC is probably gonna be around for a while. Next. You kind of skip over that. This is usually for a company that has goods, that's producing things. Startup expenses. So before you begin your business, all the things you do, all the research you do, all the attorneys you talk to, all the people you pay to listen to your woes, up to 5,000 of it can be deducted as startup expenses.
You said up to 5,000 for organizational expenses for startup and order, so 10,000 altogether?
10,000 altogether.
And how long are you considered a startup? Is it just in the first year? Or
First
even
two.
I think that's a
That's
valid
a valid. I think it is too.
yeah.
That is very valid.
We need to make some changes.
Right?
Get in office.
Change your names.
We talked about this one, we talked about the other expenses.
Right, so just like I said,
Paying yourself.
get yourself some type of system to keep track of your mileage and your expenses. Paying yourself as a sole proprietor is just as easy as writing a check. Partnership, it's pretty much the same thing. You write a check, she writes me a check. An escort, you figure it out. You write out checks, 1099s. The next one is a favorite of mine. So United States tax system is a pay-as-you-go system. As such, 9 times out of 10, if you're on a W-2, you're paying taxes as you're earning. But with the 1099, no one's taking taxes out. They just, here's the money. So the government's figured out a way for you to keep your tax bill down. And they have what they call, somebody knows this, 1040 ES, estimated payments. So it's a voucher. You send it in once a quarter, or once you figure out what your flow is with money, you'll send it in with an estimate of the taxes owed. So let's say you made $10,000 and you want to put in 10%. So you say, hey, I'm going to send them $1,000. Goes to the IRS, it's credited to your account. When you come back to file your taxes, these are taxes already paid.
So how much do you think we should do?
At least 10%.
At least 10%. Now, do you think we should do the pay-as-you-go or just put 10% up?
Well, so this is on the 1099 income. So what we did was say, hey, from January to March, we made $15,000. So we'll send them a check for $15,000. So we'll send them a check for $1,500.
And the QuickBooks has that, they actually have, I mean, you have multiple businesses, you can just, do their quarterly payment estimate and figure it out there, especially if you're bringing your income calculated from there.
one of the misnomers on that is quarterly payments. So if you're doing good, and you got income from January to December, do the quarterly payments. But if it's a slow month, you don't have to worry about sending it in. You know, I did one closing. I recovered that.
But if you do good and you don't pay,
It's gonna hurt you.
Oh,
penalties,
it-
penalties, yeah.
Well, it's not so much that you'll get penalized, it's that at the end of the year, you'll owe more in taxes.
If you don't pay them quarterly, you will get penalized. You'll get a late charges.
No, because this is voluntary.
Yeah, you don't have to do that.
You don't have to do that. You can get away with not doing it. But at the end of the year, you're gonna have to account for your income.
I don't know, because I have a 4-unit, and because we made so much per quarter, we had to pay it, and I didn't have the money at one point to give the April out because I was paying taxes and didn't have the extra money. And when I went to pay it in June, they tagged an additional late fee
Really?
on it because it wasn't paid in April.
So
Yeah.
That's a different thing. It's two different things.
Okay.
Cause I have a situation
Estimated to
where I
avoid
have to pay.
underpayment penalties. You'll get
for service.
underpayment penalties.
Okay,
I'll-
yeah, that's what it is, the
yeah.
underpayment.
Yeah, to avoid
Because-
underpayment penalties, you should prepare at least 100% of the prior year tax liability.
So I have a situation
Sure,
where
you're
I
in
have
the
to pay
system.
quarterly, but that's
I'll look that
off
one
the
up. 'Cause
taxes
you have
of
four
what I'm
class.
selling.
You have four
No,
class.
like I have to
My
send
accountant
in,
gave me the
you know,
coupons
quarterly.
and stuff. He's like, don't forget to pay these.
Don't
I'm like,
forget,
"Well,
exactly.
If I had the money, I would.
Right.
I just paid them.
Sometimes the third quarter gets double paid.
But what I don't understand though is the last one is payable in the next year,
Yep.
January,
Yep.
which
Yeah.
confuses my bookkeeping.
It does.
In my view, it confuses my bookkeeping, cause it's supposed to be in cash, but it goes out the following year, the last payment,
Right.
which just doesn't make sense to me.
It doesn't. But one other thing is that you can also pay, Illinois has the same system.
Yes, and I did the same as.
Yeah, and that's what I was
State
saying,
and
that's what I have to do, they
Yeah.
call you. Well, last year they called me up and they was like, hey, you're not paying your taxes. On, you know, like the services and the stuff I was selling online, and I was like, I do pay taxes. Oh, it's like, no, you're not sending them in, I'm like, oh.
And you're doing things online,
Mhm.
so you'd be one subject to that 1099-K.
Yeah, and it's annoying.
You,
Cause you have to sit
I think
in
you
and
got one.
Well, how much did you sell online? And then they make you bring a SD, eBay, Amazon, and your website.
Exactly.
They want everything.
Yeah.
I'm like, look, I took one of them down. It's not up no more. I'm just gonna use this. I'm just letting you know. It's I was trying to take your money.
So that's pretty much what I have here. Now, one of the things I put in the package is a single sheet with 30 items that are tax deductible. And this was just sitting around thinking about it.
So there's probably a lot more.
There's probably a lot more. Anything that's ordinary and necessary for you to conduct business is tax deductible against
Plus,
your business
I'm
income.
just looking here for meals in
Mhm.
2022 and 21. Meals were completely all year. They used to cut it in half, but it was 100% deductible
Correct.
because of COVID
Correct.
supporting restaurants. So
Correct.
that was really
Correct.
nice.
Correct. So
So if you had
2022.
10,000 in meals, they'd only really give you credit for 5. But
Right.
the last 2 years, they've given you credit for all of it.
You are correct. That's another thing that happens when we do taxes. We had the period of COVID, so folks come in. Well, during the COVID period, there was a lot of credits and benefits that they were getting people.
Are we still in the pandemic?
No. So now you'll hear people say, "Hey, I'm getting less," and that's because they pull back some of them.
Yeah, I don't see women's stuff is not on here.
But I was sitting around
Yeah,
thinking,
we can hair and clothes and stuff. That's a
Well,
tax deductible. That's a market.
the clothes thing. Hold on, before you go too far.
Yes.
Clothes are expensive.
but they're not tax deductible. The reasoning, don't,
It was something
Don't
on
shoot the
QuickBooks
messenger.
where I was like, they was like, I told them that all these outfits that I bought was for me to look nice for me. So I put that.
Okay.
all right.
Don't get audited.
Yeah, please, say it again.
For your brand. Yes, for my brand. I have to look a certain way. This right here.
The
came from
IRS
the
doesn't care.
So the rule is, if you can wear that somewhere else, to a nightclub, to a dinner, to a wedding, then even though you wear it to work,
So I branded. You wear my suit. Yeah.
If it's a uniform.
Put your logo
Real
on it.
estate.
Uniform.
And I do have a lot of that. Yeah, uniform. Okay. I do have a lot of.
But not those sexy dresses. Sorry.
So I met a realtor and she had glasses and she had her name on her glasses. And I was like, oh, that's really nice. You have your name on your glasses. And I kind of joked, like, just in case you forget them or you lose them. And she said, no, this is branding. Right. And I'm going to deduct this off of my taxes.
Oh, we're gonna do that.
Yeah. So she just had her name right on the side of the glasses. See, I got to put them.
I'm gonna go back to putting logos on panties and.
No.
And there's another sheet to help you get prepared on what to do.
Yes.
It makes, when you're organized, it makes the process a little bit easier.
Yes.
I don't know what it is, I shut down and I get sunset when it comes to taxes.
she's an organized person, and that's, but when you say taxes, she,
I started early, I think I went on vacation in September. Yeah, September. And my friend's like, oh, I got so many things planned, that's great, during the day. I said, good, because I got things planned at night. You will help me ratify my monthly expenses. And that's what we did, so every month I was doing it from September. That way come December, when I know I shut down, I'm like, oh, it wasn't that bad.
Yeah.
So we get, the two of us, we have so much friction because I get so stressed out about it. And this year was not that bad because I started and I prepared a little bit sooner. Just because every year our taxes get so much more complicated and more difficult and more challenges. But if you're not necessarily doing it the way the tax preparer does it, don't try and figure out what their deductions are. At least just separate and total. If you just separate everything in total, I've got mileage here, total mileage. I've got all my income here. I've got all my
Advertising,
dues,
marketing.
advertising, everything.
I do that for my accountant and then I send him a bill.
Yeah, that's a good idea.
Because I'm like,
does
I'm
he
doing
pay?
all,
I
I did
work.
all the
Yes.
work and then I get a bill for $1,500.
Yeah.
does he pay it when you send him the bill?
No.
Yeah.
No, he does not.
So,
He laughs.
Mr. John he's at H&R Block, which is across the street from the Postnet in Shorewood. So, make a one stop, two stops.
Right.
But
And,
please,
And then you look at number 18 and number 29 on this list.
Yeah.
Business cards and creative assistance.
yep,
So come to Postnet, and then it's a tax deduction.
it is, it truly is.
Did you do the, you have to do the drawing so we could get free business cards?
Yeah, we about to do that now. So, some new people came in, so make sure they get the opportunity.
Did everybody put their card? Can you pass it to you? Did everybody put their card in here so they can get a free business card?
Now we got an extra bit here. Here. Here's some more. No.
Did you put your business card in?
You guys put yours in here?
Yeah.
I did.
Okay.
I didn't put mine in.
I want them to know.
So, that concludes the presentation from Christina and Dale. Let's give them a round of applause. Thank you guys so much. Now we're gonna bring up the president. We want to talk to you guys about our event next month. And then also take out a card. Yep.
I've got one more thing I've got to do.
To see who won the free business cards.
Thank you.
Oh, I have to pick a card? Yes, you have to pick a card. This is
I don't want this pressure.
So our president Sarah is here. She is going to pick the card. So if you guys didn't get big playing her.
Everyone put the card in, right?
Dig deep, Sarah, dig deep.
I don't like this. It's too small. It's too small. Oh my god. I don't want this pressure. I'm sorry, guys.
Okay.
Oh, thank you. You
All right. So
You're welcome, Kathy.
about your free business cards.
Awesome. Our next event is in exactly 4 weeks in March 16th. We've got an amazing panel of women. It'll be a question and answer panel. Kathy's actually going to be on it.
Thank
Along
you, Kathy.
with Carrie Little, Sheena Baker, Sam Powell. It's a big crew. It's a big crew. Yeah, Taylor Adams, and then I cannot remember her name.
Amanda.
Yeah. So we've got a panel of 6 amazing women who are going to be question and answer. So any questions that you've got for them is going to be how they've, broken through some barriers and been very successful in their respective fields. So please come, bring your questions. If there's any questions you have for them, send them to me ahead of time, and we'll kind of get a guideline kind of set in place.
Yes. So we
Where is
it's
it
March.
gonna be?
It's March 16th. It will be in Hinsdale. It is spring formal, and it has all to these amazing women. So we will have some fun things going on, and we will have a competition for the best looking hat. I'm already doing my shopping, so bring a beautiful hat to go with your amazing outfit. We'll have, it's gonna be fun. We're gonna have appetizers, different things. So if you have questions, you want to know how these beautiful, bold, fearless women has really broken the barriers in this market, this industry, please come with your questions. Tell a friend, tell another friend, tell your whole office to come and support West Suburban WCR.
Yep.
Woo.
I'll get email blacked out when we get and everything finalized.
Yes, we will have an early bird special for people to buy tickets. We should have everything up in the next 48 hours. So you guys want to take advantage of this early bird special. After that, tickets will go up.
Yep. All right.
Thank you guys.
Yeah, thank you so much. Please grab more food.
Yes, we don't want to take nothing home.
And then as a special surprise, you saw me set up my phone. You can watch the replay.